The big question is, what is it going forwards? Is this going to be a longer recession, in which case everything rallies and then comes back down again? The Fed have to do a lot more. Is that what brings the Fed balance sheet in? Is the markets roll over and the economy looks terrible? So all you're trying to do in the investment game is put probability in your favor. That's all we do. And it's trying to figure out, okay, how do I get to a trade idea? Most people just kind of bring them out of nowhere and think, well, I just want to do this trade. Maybe it's based on technical analysis. Maybe it's based on some fundamental piece of news. But I do it in a very different way. I take a very structured approach, which is, what is the long-term secular trend? I almost never trade against my secular trends. I'll either go with my secular trend or not at all. Then once I've got a secular trend, the single most important driver of all asset prices is the business cycle. And I use the ISM survey as the guide to the business cycle, which is basically just mirrors GDP, but on a monthly basis. So my thesis is demand destruction is what's going on now. Most people have a tendency, economists, people in the commodity markets, most people tend to look at supply. So we know there's a lot of supply restrictions in commodities right now, but people don't realize that the other part of the equation is demand. So most people assume demand is stable and supply is the variable. And I find that demand tends to be the bigger part of the equation. So even if the supply situation is very tight, if demand has been destroyed, then the picture can change super fast. Well, the crypto story is still amazing, right? Crypto story is still a technological adoption curve. It's still Metcalfe's law. It's a slow year for adoption, but adoption's actually been sideways. People haven't left the crypto ecosystem like they did in 2018, which is why we've had a much more of a sloppy sideways range. And I think that adoption continues, and if it continues this way, by the time we get to 2030, we end up with 5 billion people or 4 billion people using crypto. This chart's actually been updated since, and we found that the rate of adoption was even faster. Last year, we had about 186% rate of adoption. You can see what that's like compared to the internet. Overall, it's about twice the speed of internet adoption, and that's truly extraordinary. And it tells us that going forwards, even though the internet, as it becomes a more adopted network, the rate of growth comes down, but the numbers become huge. And that's what's important to the valuation of the market cap of crypto. So again, if we look at these updated numbers, even if we assume some slowdown, whether it slows down by the same percentage change that the internet did after year 6, starting at 5 million users, took year 6 after that, it started slowing down to 43%. If we adjusted by the same amount, we get to 76% growth in crypto. We still get to 2.8 billion users in the next 4 years. And the internet at that stage was at 500 million. So you can see the dramatic increase. And this is what increases the value of crypto. This is Metcalfe's law. This is network adoption. And what we're also finding is technology, each one at a time, comes at a faster speed. So Bitcoin's adoption was extremely rapid. Ethereum has been much more rapid. And I think some of the other layer ones like Solana have been even more rapid than Bitcoin. And I expect that to continue because the base layer was there. Bitcoin was adopted so fast because the internet existed. Ethereum was adopted so fast because Bitcoin had existed and had been adopted. And the same with the other layer ones. Same with NFTs, which were even faster in adoption. If we think of the value accretion to the Bored Ape Yacht Club, for example, it's probably the fastest value accretion to any asset in all history. It's about 250,000% in a year, which is truly extraordinary. Bitcoin transacts more volumes than anything else, and it has a lot of active addresses. And what's amazing is the two charts, even though the numbers are wildly different, the two charts mirror each other perfectly. It tells you that price is actually a great indicator of network adoption. So it doesn't give you a lead, and I'm working on rate of change models and other things to give us some leads on this, but generally it tells you crypto's generally well priced by the market. It's very efficient in what it does. Now, don't forget, price is not an input in the model, and it works for every single crypto asset I've ever looked at. That signal is the signal for risk assets, I believe. And I think we'll see growth end of tech, which has been utterly destroyed and is down 70% plus, and crypto, and probably gold actually, start to outperform along with bonds. And those should be the phoenix that rise from the ashes, and some of these other more cyclical plays will do less well. Those are the things that have been outperforming over the last 18 months. The big question is, what is it going forwards? Is this going to be a longer recession, in which case everything rallies and then comes back down again, the Fed have to do a lot more? Is that what brings the Fed balance sheet in? Is the markets roll over and the economy looks terrible? I'm not sure. My base case scenario is a V-shaped recovery from a absolute cliff edge. But it could be something more drawn out, in which case we've got a much nastier equity bear market to come. But we'll wait and see. So it's a pretty grim prognosis, but I think this is the opportunity I've been looking for. I've been buying technology stocks gradually on a dollar cost average basis over the last couple of months. I will probably go out another month, and that will give me hopefully this whole low period if I get this right. The weekly DMARC indicators give us between 2 and 4 weeks for this low to come in. Crypto is identical right now. We've got the bad signal of we need the dailies to get where we're going, and that's probably another week or 10 days away of this kind of price action that we've been seeing, which is pretty ugly. And the weekly indicators are somewhere between 2 weeks and 5 weeks away before we get the final capitulation lows. It was that DMARC setup that got me out of being short, or out of my shorts and out of many trades in the pandemic as well. And I take them very seriously because they usually lead to very good signals.